In this episode of Safe Money Retirement Radio, we'll explore how retirement income streams face a serious challenge with the coming inflation, discuss the Medicare increases for 2022, and look inside a case file where a 64-year-old widow was tired of seeing her account value drop from market losses. Let's get started.
Is your retirement money safe? Really safe? Find out today on Safe Money Retirement Radio with your host, Tim Wood.
Hello, and welcome to another episode of Safe Money Retirement Radio. I am your host, Tim Wood. This podcast and on-air show is dedicated to those of you who struggle with the fear of losing your retirement savings because of forces outside your control. I've been doing these podcasts and on-air shows for a couple of years now, and those of you that have been listening for a while will notice a change in the show's format starting next week. But I'll still be here every week keeping you informed about all the latest information and ways to keep your retirement safe, just with a new format. As always, you can give me a call at 800-231-PLAN or visit me at safemoneyretirement.com for any help that you may need. And also don't forget to visit safemoneyretirementwebinars.com to watch any of my past Safe Money Retirement webinars or register for any upcoming ones. Now, let's explore how everyone's retirement income stream faces an uphill battle against the coming inflation. If you want to maintain your current standard of living in retirement, especially in this current environment, maintaining a consistent income stream may not be enough, as it will weaken over time as prices rise. We all know inflation is already here and more is looming. We know it's already here every time we go to the hardware or the grocery store or gas pump or buy gifts for others. It's everywhere. There was a 270% rise in healthcare expenses from $1.4 trillion in 2000 to $3.8 trillion in 2019, and a 46% increase in the cost of electricity. And if you've been to the hardware store lately and seen the prices of lumber, there has only been 1 year in the last 50 without a rise in inflation. And yet, the cost of living adjustment for Social Security has only risen by an average of 2.1% per year. Now, when this really catches up to you is if you look at the cumulative effect over decades. For example, a $100,000 income today would need to become over $134,000 in just 10 years, and that's only at a modest 3% inflation rate. If that rate were to rise to 5%, it becomes over $162,000. If you're on a fixed income, this can be terrifying knowing what's around the corner with all the spending going on lately. So what are your options? You can increase your withdrawals and potentially either accelerate your portfolio depletion or reduce your legacy, maintain your income level and gradually decrease your standard of living, or incorporate a potentially rising stream of guaranteed income from a safe money retirement product that can help to offset inflation. There are products that guarantee no losses and include a feature where the guaranteed income can increase over time. These special hybrid type safe money retirement products are perfect for someone looking for safety and a potential for higher income in the future. So don't let the inflation monster scare you. Make a plan today for how you will handle the rising costs that may be just around the corner and for the foreseeable future with rising inflation. I can help. Just give me a call at 800-231-PLAN or visit safemoneyretirement.com for more details or to speak with me directly. And don't forget to register for your free copy of the Safe Money book while you're there. The Safe Money book is an easy-to-read 108-page book and clearly spells out how these safe money retirement programs work, including U.S. Treasuries, annuities, how inflation works, how to avoid excessive fees, and all kinds of other great information you need. Just give me a call at 800-231-PLAN or visit safemoneyretirement.com, and I'll get one of these books right out to you. In this week's noteworthy retirement news, we're going to look at the 14.5% increase in Medicare premiums that's coming for January 2022. The standard premium for Part B will be $170.10 next year, far above the earlier government estimate of $158.50. The deductible for Part B for next year will be $233, which is up $30 or 14.8% from this year. Now, these bigger than anticipated increases are partly attributed to rising prices and utilization across the healthcare system and congressional action that limited the increase in the 2021 Part B premium. Also, Medicare beneficiaries who pay monthly surcharges for premiums may want to take note of how much more they'll be charged next year. With the standard monthly premium for Part B now set at $170.10 for 2022, as I just mentioned, the so-called income-related monthly adjustment amounts, or IRMAs, will result in higher income beneficiaries paying anywhere from $238.10 all the way up to $578.30 each month for that same coverage. According to CMS, which is the Centers for Medicare and Medicaid Services, about 7% of Medicare's 63.3 million beneficiaries with Part B will pay IRMAs next year, so this could apply to you. The adjustments kick in next year for individuals with modified adjusted gross income. Now, that's your adjusted gross income plus tax-exempt interest above $91,000. Now, that's for a single person. For married couples filing a joint tax return, that amount is $182,000. For Part D prescription drug coverage, the additional monthly amounts range from $12.40 to $77.90, with the same income thresholds applied. Lastly, and this is for everybody, the deductible for Medicare Part A, which is your hospital coverage, per benefit period, which generally starts when you're admitted to the hospital each time you are admitted, will be $1,556 in 2022, which is up $72 from this year. Now, keep in mind your Social Security payments, if you're already receiving them, will go up this year by a record 5.9%, which will offset and in many cases be more than these additional Medicare costs. But all of these additional costs will eat away at your Social Security increase. So be aware of these costs and plan for them now. Visit safemoneyretirement.com with any questions or to contact me. In this week's case file, we'll look at a 64-year-old widow who was tired of seeing her account value drop from market losses. After a thorough review of her current situation, we determined a fixed indexed annuity was a right fit for her, as it would still allow for growth in her chosen indexes while protecting her from any further losses, no matter what the market ever does. And the product she chose had no fees of any kind, and it allowed her to withdraw up to 10% annually starting in year 2 with no fees or penalties. She was thrilled to never have to worry about losses from any market event ever again, and to have access to 10% of her money annually if she ever needed it. I can help you find your peaceful solution as well. Just give me a call at 800-231-PLAN or visit safemoneyretirement.com right now, and don't forget to register for your free copy of the Safe Money book while you're there. For this week's Full Chord, I want to talk about the magic of Christmas and the entire holiday season by quoting 3 others. First, Winston Churchill said, "Christmas is a season not only of rejoicing, but of reflection." Hamilton Wright Mabie said, "Blessed is the season which engages the whole world in a conspiracy of love." And this one's my favorite. Fred Rogers said, "I like to compare the holiday season with the way a child listens to a favorite story. The pleasure is in the familiar way the story begins, the anticipation of familiar turns it takes, the familiar moments of suspense, and the familiar climax and ending." As we enter December and the heart of the holiday season, let's all remember what this season really stands for and means for so many around the world. Enjoy the shopping and the running around and the getting together and everything, as it's a piece of normalcy we can all enjoy together.
Is your retirement money safe? Really safe? Or does your plan advisor work for the insurance companies instead of working for you? It happens more often than you might think. Tim Wood is the independent plan advisor that many of your neighbors count on to guide them to a safe and prosperous retirement while eliminating the fear of market losses and the fear of running out of money in retirement. As a certified financial fiduciary, Tim is obligated to always put the needs of his clients first in every situation, and you can trust him to help you find your best plan as well. Never worry about market losses again. Protect your hard-earned retirement now. Visit SafeMoneyRetirementRadio.com for your free copy of the Safe Money book and learn how to protect your retirement from losses, fees, and inflation. This message is brought to you by Tim Wood and theplanadvisor.com. Medicare, life, and Safe Money Retirement made easy. Visit SafeMoneyRetirementRadio.com right now.
Thanks for tuning in to this week's Safe Money Retirement Radio Show. Join me again next week to continue your free Safe Money Retirement education. Until then, keep it safe and visit SafeMoneyRetirementRadio.com. Take care.